Good evening. It's Vijay here. Welcome to a session of Sunday's Reflections. Today is 7th December 2025. Here is a time, a Sunday. Generally, we reflect on what happened last week and what events will happen in the next few months, and also something on, just beyond the regular day to day transactions and volumes and news and whatnot. Basically, a perspective on what we should be doing. Now, this morning I did a Spaces session on Twitter. I very rarely do Spaces sessions on Twitter. I generally would like to avoid because they're not that great in terms of outputs. And but once in a while I like to do because there are some topics where I feel very strongly about it, and I feel it is better to convey in a conversational way rather than it's a one way broadcast when I'm just talking to all of you through this media. So before that, I have somebody had suggested that I should do in Hindi. So I'm trying. There is a facility for dubbing it in Hindi, but I have now thought of putting some. You can actually do it through having these captions in Hindi, so that one can try for time being. But I will somehow get understand how the dubbing is done. Uh, anyway, coming back to why I did it is the topic I'd given was market mein Naya kya hai. The reason because there are a lot of narratives which said the markets are in trouble because of this, because of that. We have been fooled, and indexes have gone up, both Nifty and Bank Nifty, but our stocks and portfolios are not doing well. So there is some conspiracy theory. FIs are selling, and we are not able to make money and all that, so on and so forth. So I feel generally these are all narratives. These are not based on facts. I thought I should place some facts before people, which I did, and excerpt of what I spoke this morning is what I'm going to present here. This is a vision, so you can see. So this is these narratives which are there. I get to remember an old broker in the Madras Stock Exchange who told me opinions are like assholes. Everybody has one, so you have to be very careful in what you look at. So there is some information. Data is in there's some data from the net which I picked up from the this one Equity Insights, which says drawdown in Nifty 500 stocks from 52 high. Median drawdown is about 19% as we speak. Average drawdown is 20%. Nearly one in four stocks are having a median drawdown of more than 30%. Tejas Network, he says it's 65%. Praj Industries 64, Ola at 60. This is a few days old data, and therefore, one has to worry about it. True, there is no doubt that while the Nifty and Bank Nifty and a few other indices have done well, by and large, the stocks which were popular in 23 and 24 have all gone in the dumps. For instance, railways and defense, which I was warning for a lot of time, people jumped into it, made some money over the last, over few months in 23, 24, but at the end of the day, they're stuck and they're also down by 15, 20, 30, 40%. So one has to be careful. So now what I always say is most important is fundamentals are important, but more important than that is liquidity. So liquidity is the most important driver of the markets. So let's look at where liquidity is coming from. And I'm also trying to say that have we seen this drama before? Most of the people feel that this is the first time and they've been cheated, and like this we have not seen in the history. So I would like to go back to that a little later, but I would like to say where is the liquidity coming from? The SIPs are the one of the biggest source of liquidity. If you look at SIPs, for instance, in 2020 21, when I would say that the new set of investors came in large numbers. If this one were about 8,000 crores, average 8,000 to 9,000 crores. 21 22 it increased to lakh and 24,000 crores on an aggregate basis. So 2021 was about 96,000 crores, 21 22 about lakh and 24,000 crores. In 22 23 it was about lakh and 56,000 crores. 23 it almost reached 2 lakh crores, and 24 25 it is about 2 lakh 9,000 crores. And this month, this year, it's about close to 2 lakhs. It is going to increase only because we are talking the financial year. So now with so much of this one, the market has not done as well as what most people think it to be. Why? So now let's go to this. This is the culprit. The culprit here is the kind of IPOs which have come. See, if you look at this graph, if you see in 2017, you had, if you take 2020, I would say 2020, you had 15 IPOs in that year, calendar year, and amount raised was only about 20,000 crores. Whereas in 21, it went up to about 60,000 crores. Uh, so 21, sorry, it went up to about lakh and 20,000 crores. You remember those, that was the time when Zomato and Nika and so many other stocks came through IPOs, which very large amounts they collected, and they have not performed well by and large. Then 22 was a bad year because you never got that kind of returns. So 23 also was low, which are around 50,000 crores. But suddenly you see 24. In 2024, it has again gone above lakh and 60,000 crores. And 25 calendar year, when this graph came, it was about lakh and 20. This was in end November. December alone, it is going to raise about 40,000 crores. So lakh and 60,000 crores or more will be raised in the month or in the year, calendar year 25. So we are suddenly seeing from 23, where had it got only about 57 IPOs and having only about 50,000 crores, we have gone to lakh and 60,000 crores. That is three times. So the money is being sucked by the IPOs. You have to remember that is the reason why, even though the fundamentals are good or improving, things are not working out at the ground level. So I had mentioned this in one of my talks on हमें तो अपनों ने लूटा है गैरों में कहाँ दम था. So what is the meaning of this? So just let us look at where the fund flow, we have seen the fund flow is going out there, and let's see how the fund flow is operating in the Indian market. This is a repeat, regular viewers would know this, but still to reiterate, because sometimes you have to learn the lesson day in and day out, to understand where we are coming from. If you take last 5 years, I had, this was till October end. This was about like if you look at what happened to the DIS got about 18 lakh crores, and FIS sold in the last 5 years 8 lakh 50,000 crores. So 9 lakh 47,000 crores were sold by what I call the third force. So the third force is very important in our market. We are not looking at that because that data is not available. To reiterate, the third force is promoter selling. Recently, we saw, for instance, Bharti Airtel selling about 7,500 crores. We have Whirlpool promoter selling about 1,500 crores. We have been seeing this promoters of Indigo, for instance, selling left, right, center. So 50,000 crores has been sold by one promoter in the last few years. So promoter selling is huge. Then you have corporates, treasuries, which is huge. Then you have AIFs, you have PMS, ultra high net worth individuals, and finally the retailers. So all of them put together, 9 lakh 47,000 crores. If you just take this year, forget the last few years. In 2025 till October end, it was 3 lakh 77,000 crores. If you take November, we have got another 50,000 crores, and in December you don't know how much more it will come. So we'll probably end up with 4.25, 4.3 crores, or close to 4.5 crores, you could say, 4.5 lakh crores. So that is huge. That is double of what happened last year. Last year, the third force sold about 2 lakh 22,000 crores. This time we will be almost doubling that. So that is huge, which means the smart money is exiting the market, and therefore the dumb money, or let's say the mid cap, small cap, and micro cap, is where people are stuck, and that is not going up because the FIs or DIs are buying maybe the bigger ones, the large cap stocks. So now let's look at what happened in the past. I said IPOs are the main cause and also the third force. In 90s, for instance, we have had a similar situation. In 90s, for instance, if you look at it, the liberalization happened in 91, 92. So that year there is about 1,900 crores. The next year was the Harshad Mehta year, and that time went up to 6,200. That more than three times. However, in 93, 94, even when the crash was there, IPO started coming, and that went up to double of that at 13,000 crores. For the next 2 years, it was around 13,000 crores. Just look at the number of issues. Number of issues in 94, 95 were about 1,343, which means 200 days means 7 issues on average per day. So the same scenario happened in 94, 95. Again, 11,822 crores were sucked. And this is the time when DIs were strong, they were buying, and FIs were buying, yet, and these fellows came with these IPOs, and the market did not go anywhere during that time. I mentioned this between 1992 and 2004, the market effectively went nowhere because 1992 in April, the Sensex was 4,500. There was no Nifty at that point of time. And in 2004 May also, it was 4,500. except for a brief while between 99 November to around January of 2000, February of 2000, the index Nifty went up to, not Nifty, Sensex went up to 6,100 or something like that. Otherwise, generally it was between 4,000 and 3,000. It went to 2,800, it went also up to 4,500, but very briefly it stayed above or below these two levels. The band was 3,000 on the lower side and 4,000 on the upper side for nearly about 12 years. So why? Because continuously selling, continuously sucking up the liquidity by the IPOs. So that's what happened in case of in sorry, this is now I'm not able to get this page on something that got stuck, but nevertheless, so this is what happened then. Now I'm coming back to whether we have seen this kind of scenario before. Just have a look at this graph very carefully. This is 2018 January end, just before the budget, the market peaked out. So this is the top pane is the Nifty, bottom pane is the small cap index. Small, and I just taken representative small cap because this is where the big rise was in the year 2017, soon after the demonetization. So in 2018 January, just before the budget, we had the market peak. Budget was very bad. They introduced the increased short-term capital gains. They introduced the long-term capital gains. Mr. Jaitley introduced that, and they also increased the STT. So generally, it was very bad for the market, and all the markets crashed. This was the Nifty which crashed, and this is the small cap index crashed. It is a replica of what's happened in the mid cap and micro cap. Just let's take the small cap index. So it came down for some time, but the Nifty bounced back and made a new high in that year. You see, whereas the small cap index did not make a new high. Then in 19, again it made a new high. You see here, in 19 it made a new high, it fell down, but the small cap index did not make any new high. In 2020, January 2020, before the COVID, Nifty made a new high. So Nifty made a new high in 18, 19, 20, 19 twice, and then 20. Whereas you see small cap index, it never went to that high at all. In fact, it crossed that high only in 2020 later. What is important is in this year between 2018 January to January 2020, 2 years, the market, as per the investors, retail investors, they were not making any money, but the Nifty was going up. So similarly, we are having this 1 year, last 14 months. The small cap index, mid cap, small, micro cap are not doing anything, but the Nifty and Bank Nifty are going up and giving you heartburn. So it is not that we have not happened before. There is no conspiracy. It is just simply liquidity which is driving the market, and the liquidity is only reducing. So now let us see. We are here. Everybody is expecting a crash. I don't know about the crash, as I keep telling you. Right now, what is happening is what we should look at. We are having what are the called the tailwinds. What are the positives? The positives are December, January. Generally, is a seasonality factor when things are better or at least flat. Very rarely in December do we have the market going down. We had that in 2022, but that was because we had a fantastic rally between June of 2022 till December 1st of 2022. And I think insiders knew that there is this Hindenburg report which is coming in January. And so they started selling across the board, which we didn't know. It came only in January of 2023. So nevertheless, that was an exception. Otherwise, December is generally a good month. It's a volatile month, but it's a good month for the markets. So I'm expecting the same thing now. We have seen already Nifty and Bank Nifty at all-time highs. We are also seeing some other sectors which I'll come back to. So seasonality factors are positive. Global markets are strong. Whatever you may say, any fall has been quickly bought, both in US as well as in Europe, and to some extent even in Japan and Korea. So global markets are strong. So it is very unlikely that we will crash during this time. Then you have global liquidity. Liquidity is very strong, and you are seeing on 10th, I'm sure that the Fed will reduce interest rates, which means more liquidity will come. And RBI policies make the local liquidity also strong. Sorry, this should be not global liquidity strong twice. It is a local liquidity also. I have to add. So because of RBI policy, yesterday, for instance, they are going to put in OMO of some huge amount in the month of December, which means huge amount of liquidity is there. So now let's see what are the headwinds, which are the negatives. So if you see IIP numbers, weak industrial growth is there. And if you look at, this GST, they reduced in September. So one would have expected in November at least, the GST should be better. But GST numbers are poor. In October, it is good, but in November, they have gone poor. In fact, November GST numbers are the lowest in the last 12 months. People said that you reduce taxes, then you will get more of GST. For some reason, that is normally the case. If you reduce taxes, you will get more revenue. But why it is so is because the industrial production has slumped, sales have slumped. People are still not going out and buying in that kind of quantity. Therefore, you got a November series, which is very worrisome actually. Okay, so you would be very worried that weak industrial growth is there. GST numbers therefore are poor. Then the locals and FIs continue to sell. IPOs are huge. And then you have Trump's tantrums. We are the only country in the world where Trump is not talking about. You see, he's talking to Brazil also. Brazil has got 50% tariff. India has got 50%. We are the two highest. But he's willing to talk to Brazil and reduce interest rate, reduce tariffs, whereas India is not talking about. Though we keep on hearing rumors and news items, source-based items, this is what the opinions and which are these, I say people are having some, vested interest. They say US delegation is coming, so something will happen, and something has not happened. Till it happens, it does not happen. So we have to be careful about that. However, I don't want to get afraid of the market and run away from the market, because in any bull market, you will not have all sectors performing. So there are some sectors performing and they're performing well. Take Nifty itself. Nifty has done well. Bank Nifty has done well. In Bank Nifty, you have private sector banks as well as PSU sectors, PSU banks doing well. Both are doing well. It is not only private sector banks which are having a higher weightage in Bank Nifty. So there will be at least 4 or 5 sectors which will do well. So you have Nifty large caps doing well, banks private plus PSU, metals base plus precious, and autos and auto ancillaries are doing well. They all made an all-time high recently. And then you have select large caps, as I said, are doing well. Right now, even Reliance is doing well. And you have Bharti Airtel, which is doing well. You have, apart from the autos, we have some L&T, which is doing well. It has made an all-time high. So there are select large caps which are doing well. After all, in a portfolio, you need to have about 15 good stocks. You need 15 good stocks in the market. In this market, there are clearly 15 good stocks. Metals itself will have 5 stocks. The gold is there, silver is there. Plus, you have banks, private sector, PSU. Plus, you have got select large caps, as I told you, L&T, and so many other. I'm not recommending anything. I'm just saying there are opportunities even in this market because they're making all-time high. So you should be buying strong stocks, is what the general experts say. So are there strong stocks? Yes, there are strong stocks. Then there are export-oriented mid-caps having a moat. Now, the rupee has weakened. So generally, people are going and buying IT stocks. I am negative on IT because I don't think IT sector will benefit by weak rupee, because all of them will be hedged. Whereas if you take some other stocks which are having a moat, where they're having export, where they have pricing power, those stocks you'll have to pick and choose. I'm not recommending anything, but I know that they are there. So you can go and buy those kind of stocks, and therefore you will be able to survive even this sideways market. So what is my portfolio? I've been arguing on precious metals. Silver is my biggest, is our biggest family portfolio, is the biggest this one weightage, because I believe silver is very underpriced. I mentioned also in today's discussion that silver is at $58 globally. $50 was seen in 1980, and 1980 to now is 45 years. 45 years, all asset classes, all assets have gone up significantly. Whereas silver, which is now recognized as an industrial metal also, apart from it being a precious metal, it is also in the critical list of minerals by US. It's also being bought heavily by India. And RBI has said from April 1st of 2026, they are remonetizing silver, which means you can take loan against silver up to 10 kgs, which means up to 15 to 20 lakhs. Loan will be given to anybody who's having silver and silver ornaments and silver utensils and anything to do with silver, not silver bullion, not the the silver biscuits. You can have silver coins. So silver will have some reason to go up. At least it will not have any reason to go down. It is volatile. It can go down. There is narrative being built that silver will go down to $34 to $38 because they feel that the last time that was the resistance, so it will go back and take the support. A lot of technical analysts, a lot of experts are talking of it going back from 58 to 34 to 38. If you take those $20 down or $24 down, it means more than 40%. I do not see why silver should go down 40%. It is volatile, but I do not expect it to go anywhere there. $50 itself may be a very big support, in my opinion. Again, I'm not recommending anything. I'm not a SEBI registered advisor, but I'm just telling you the rationale. Silver is most underpriced vis-a-vis the last 45 years. Industrial use now with EVs and solar and so on and so forth. It is also being a monetized metal from April 26. Even Trump has given an executive order where he says commodities can be included in 401k purchases by February of 2026. So all of it looks, there is fundamental reasons for buying something like this. This is my rationale, and I'm buying that. Gold, of course, is favorite with all the sovereigns. I'm buying base metals because copper is the one. Copper is called, Dr. Copper, and Dr. Copper, the copper mines, 7% of the output of copper mines are in shambles. So there is no supply. Incidentally, silver also has peaked out. Silver mining has peaked out in 2017, 2016, I think, and subsequent last 4 years, the supply has been less than the demand. Normally, supply there is to be oversupply in silver, so that's why silver is always, the price was lower. But now the demand is increasing because of all this EV and solar and all that, and plus sovereign demand, plus retail demand. All this makes that there is the for the last 4 years, for instance, the supply is not able to meet demand. Sooner or later, the prices have to be higher because of pure economics. It is mathematics. Then Hindustan Zinc makes Hindustan Zinc has got silver as a part of their mines. Please note that 75% of silver is coming from non-silver mines. There are only 25% silver mines are there in the world. So all of the 75% of silver what we get is from the either copper mine or zinc mine or some other mines, but not exactly silver mines. Then I'm saying, as far as public sector bank, this is my portfolio. I'm saying Canara Bank we are holding, and City Union Bank, because City Union Bank was one of the finest banks as far as the chart patterns were concerned, fundamentals were concerned. But somewhere around 2020, it peaked out at around 250, and then it has fallen by the wayside. It has now crossed 250 after 5 years, more than 5 years, 5.5 years. So generally, I buy stocks which are strong. So same thing with Canara Bank. Canara Bank used to be around 115, 110. It used to be below Punjab National Bank. Today, Punjab National Bank is 120s. Canara Bank is around close to 150. So, and it has broken a 10-year, more than why 10 year. 2010 was the last time it went up to 164 equivalent. Today, it has come close to that 150. So, for the last 14 years, Canara Bank was below 150. So now we are reaching 150 and it was below 140 actually. It has come there. So I like to buy stocks which are long gestation. After that, it has gone up. Of course, there is risk in every single thing. Tomorrow, RBI may go back on its policy. Trump may say, okay, 401k will not do it. Then EVs may, the market may collapse. Solar market may collapse. Anything can happen. Risks are always there. But I am buying it with purely on fundamentals and not on any, narratives which are being built. So whatever you do, I hope it is successful. And thank you for joining me on this evening. You better think about it, consult your advisor, and before taking any decision. Thank you once again, and have a good night.